So how can you use candlestick patterns to make money? In this video, I'm going to go over 5 different reversal patterns that can turn you into a winning trader. What's going on? On this channel, we talk all about trading the stock market with the idea of allowing you to maintain a full-time job or trade as a full-time job. So if you're new here, consider subscribing. And today we're going over candlestick reversal patterns. So the whole idea with these reversal patterns is that you are using them against a predetermined support or resistance level. And it doesn't matter what you make that support or resistance level off of, but the idea is that you've already established that you think that the stock might have a reverse there. And so using that level, you look for these patterns that we're going to go over. So when you see these candlestick reversal patterns establish at those predetermined support or resistance levels, you can use those as a key to get into a trade with the idea that the stock is now going to reverse its direction and you can capture that move. These patterns can be used to trade in any market and on any time frame. Because these patterns are based off of psychology and what investors and traders are feeling at the time, it allows you to use them in any different market. It doesn't have to be just for stocks because that's how stocks work. This is just how psychology of investors and traders works. And that is why these are so powerful and they allow you to use them in any different market. All these patterns work either going long and betting that the stock is going to go up, or shorting the stock and betting that it is going to go down. And first we're going to go over the bullish engulfing, which is a long reversal pattern. So for the bullish engulfing pattern, the idea is that a stock is trending down towards a predetermined support level. And the idea is that at this support level, a huge green bullish candle happens the next day or just at that level somewhere. And how this bullish engulfing candle has to form is the open has to be lower than the close of the previous candle, and the close also has to be higher than the previous open. So the idea that it's engulfing and taking up the whole candle of the previous day or just previous candle. And the idea of that is it's a huge sentiment change in the stock and people don't want to sell anymore. People really want to buy this stock now. And the idea that now this is going to change a new trend and it's going to start trending upwards. And then on the flip side, you have a bearish engulfing candle. And the idea is you have a predetermined resistance level and that this stock is trending up into this resistance level. And then you would see a huge bearish engulfing candle taking up the whole entirety of this previous bullish candle, with the open and the close being wider than the open and close of the previous candle. And this would signal a huge sentiment shift in the stock and start a new downtrend. For this next pattern, you need 3 candles to confirm it. And this is the Doji pattern. First, we're going to go over the Doji top. And the 3 candles you want to see is these 3 right here. So you want to see the trend initially that was going upwards, and then you see this candle right here that's called the Doji, and then you want to see this bearish candle afterwards that creates or is the initial start of the reversal. And the key to this pattern is that there is a gap between candles 1 and 2, and then another gap between candles 2 and 3. So the idea that the stock was super bullish before, and so it gapped up the next candle or next day, and then people weren't as excited that day because here let's say it hit our resistance level and the sentiment started changing in the stock. There was much more sellers than there used to be, and so the stock didn't move that much over that candle. And then the next candle, the stock then gapped down, meaning that this close right here was not at the same price level as the open of the next candle. So the next candle opened a lot lower than the close of that doji top. And so you want to see this gap here between both of the candles, and that allows you to really confirm that this pattern is going to happen. And then with the next candle being a big bearish candle, that really signals the start of this reversal. So next we have a island bottom, and the whole idea of this one is that it's actually a lot like the doji bottom. You have this previous downtrend established into your support level, and you actually have this gap down as well, and this gap up. But just the difference between these is that the chop period, or the period where the price action over that time is really not doing anything, is a lot longer. The price gaps down to that support level, and it takes a little while longer for the sentiment to shift into a reversal. But it still tells you that the sentiment of the stock is not to sell off anymore. It's more choppy, and people are starting to change their minds. More buyers are coming into the market, and that's why the stock, or just the price of this market, is not trending down anymore. It's more trending sideways. And then when you get this gap up right here to this reversal candle, that really signals that the new trend is going to start, and this stock is going to start going upwards. For the island top, we just have it in the reverse. We have that resistance level. We have this bullish candle with this gap into our resistance zone, and then we have a few days of chop, and then that gap down. And to illustrate why this is just like the doji star, you can see that this would be if we combined all four of these candles, this would be the opening price of that candle, and then this would be the closing price. And so we would have, this would be the body of that candle, and then you would have the wick all the way down here and the top wick all the way up here. And you can see that this kind of makes a doji's top, and that is why the island top and doji top pretty much work the same way. It's just another way to look at it, and that's really all these patterns are, is ways to look at candles and to understand what they mean and the sentiment that they are giving you and what they're really telling you. The next candle we have is a bullish pin candle, and that candle is this one right here. And the idea behind that candle is the stock sells out throughout that candle. Price sells all the way down in maybe into our support level or around that zone, and then in the same candle the price then reverses and the candle closes at around the same price. It doesn't have to be the exact same price, but generally you want it to pretty much look like this candle right here. And the idea then is it has that huge wick on it, and this is signaling that the sentiment has shifted and people are wanting to buy this stock, because previously you had many red candles trending down into this zone, and now you're getting a new type of candle that shows that people aren't willing to really just sell. There's people wanting to sell and buy, which is why the candle closed flat. Essentially, it opened and then closed at the same price, and then you begin to see these green candles starting to form, and that shows you that we're going to have a reversal and the stock is now going to start trending up. So for these bullish pins or bearish pins, they're a lot like doji tops and doji bottoms, but they all have this really long wick instead. A doji top doesn't really have that, and this really signals that the price tried to keep going in the direction that it was, and now it is reversed and it is going the opposite. And an easy way to tell which direction that this pin is pointing, this one is being a bearish, because you can kind of essentially draw an arrow with it and it'll show you that this is pointing downwards and the stock is going to reverse based on this candle pattern developing. So quite often when you're looking for a reversal pattern at a support or resistance, you will get a candle pattern like these two right here that is really close to an engulfing candle, but it's not close enough, so you can't use that pattern. But this is a different pattern and it still counts as a reversal pattern. You just need to know how to look at it and really what it's telling you. So what we have here is we have a red candle that is going into our support and then a green candle that is reversing. And the idea behind these is that they are relatively similar in size, and it's showing you that the stock was selling off and now it is reversing and going back up. And if you take both of these candles and combine them, much like our island top to a doji, you create a bullish pin. And just like a bullish pin tells you that the stock is now gonna reverse and go up, that's what these tweezer bottoms and tweezer tops are telling you. With all these patterns, a lot of them are just needing to know what they're telling you and maybe sometimes combining them, or knowing that you can combine them to make candles that would look like something that is a stronger reversal pattern that can really show you that you do have a reversal pattern, even though maybe the chart or the candle layout you have or time frame really doesn't necessarily seem like it. And so then if you combine those two candles into this bullish pin, you would have this reversal pattern that just looks like a bullish pin reversal pattern, and that's really what a tweezer bottom is. It is also just a bullish pin in just another form. The same goes for the tweezer top. Either you can know that this is a reversal pattern alone, or you can combine the two candles to make this small body right here with this super high wick, and then the small wick essentially making that arrow that we talked about, telling you that the pattern is going to reverse. Hey, nice job getting through that video. I know it was a long one. Make sure to subscribe to the channel if you want to learn more about reading stock charts. It'd be awesome if you gave me a like, and if you have any questions, make sure to ask them in the comments below. I will get back to them, and I hope to see you in the next video.